In 2026, India and Europe are standing at a crossroads. On one side, the headline dream of the biggest free trade deal of the decade. On the other side, a new reality, a carbon tariff era, tougher regulations, and climate politics being mixed into trade. So here is the caution you should care about. Whether you live in Mumbai, Milan, or Miami, will India-European Union ties becomes the most stable bridge between the global south and the west, or will they become a battlefield of tariffs, standards, and carbon taxes? And today we are going deep without propaganda, without jargon. I am opening three loops. Stay till the end. At the end, I'll give you India's three non-negotiables for India-European Union deal in 2026. I'll explain CBAM in 60 seconds so anyone can understand it. And I'll reveal the smartest win-win package India should demand from Europe. So partnership stays partnership, not a pressure. Hello everyone, hope you all are doing well. Welcome to Diplomat's Desk. I am your host Meet Shah. Let's start with what changed from 2025 to 2026. In 2025, the India-European Union story was about momentum. The European Union and India were pushing FTA negotiations hard, including multiple rounds and stock tech style meetings. India and EU also began talking beyond trade towards a broader strategic agenda and security cooperation. But in 2026, the story becomes more urgent because two timelines collide. First, the trade deadline reality. Reports in late 2025 indicated both sides were no longer confident about concluding by end 2025 and talks were expected to spill into 2026. Second, the climate trade reality. The European Union's carbon border adjustment mechanism (CBAM) moves into its definitive regime from 2026. So 2026 is not a nice to have a year; it's a decision year. And there's also the optics because optics signals political intent. Report says the European Commission President Ursula von der Leyen and European Council President Antonio Costa are expected to attend India's Republic Day in 2026, with the visit coinciding with an India-EU summit. That is not routine diplomacy. That's a message. Europe wants India, and India is signaling Europe is a strategic partner, not just a market. But now let's slow down and define what an FTA actually is. The term of the day is free trade agreement. A free trade agreement is not a friendship certificate. It's a legally binding deal that decides what tariffs go down, what standards apply, how services and investment flow, and how supply chains are built. And here's the first myth we must break. Most FTAs are phased, sensitive sectors get safeguards, and the real fight is often not tariffs, it's non tariff barriers. Now, let's talk about FTA reality versus headlines. Many headlines make this look simple. India and European Union will sign a deal soon, but the reality is complex. The India-EU negotiations cover a wide set of policy chapters reported as around 23 areas including goods, services, rules of origin, customs, procurement, dispute settlement, IP, and geographical indications. And the key friction points are well known. First, autos and market access. The EU wants lower tariff on cars. Reuters has noted car tariffs in India are very high, and the EU is pushing for reductions and greater market access. India's concern is equally rational. If you open too fast, you risk domestic and manufacturing jobs and the ecosystem. Second, beverages. Reuters also noted the EU seeks lower tariffs on alcoholic beverages. For India, this sits inside a bigger debate, revenue regulation and social policy. Steel and industrial competitiveness. Recent reporting indicates steel is one of the sticking points, and India wants lower duties on certain steel exports while also seeking flexibility around the EU's carbon tax rules. Fourth, agriculture and sensitive livelihoods. Agriculture is the classic FTA minefield because it's not just economics, it's livelihood and politics. And Europe has its own domestic constraints too. EU farmer protests around trade deals show how politically charged agriculture is inside Europe. So both sides are defensive here. Fifth, intellectual property and pharmaceuticals. Reuters points to pharma and IP as a recurring friction. EU criticizes India's patent policies while India prioritizes affordable medicines and public health. Sixth, data, digital trade, and trust. Reuters reports India wants recognition as a data secure country to boost digital service trades. That's not a small issue because digital trade is now strategic. So when you hear FTA coming soon, remember it's not one deal, it's a dozen of deals inside one umbrella. Now here comes the biggest pressure point in 2026, CBAM. CBAM stands for Carbon Border Adjustment Mechanism. The EU's official description is simple. It puts a price on carbon embedded in certain carbon intensive goods entering the European Union and aims to encourage cleaner industrial production outside the European Union. Why does the EU says it's doing this? To prevent carbon leakage. So what's the carbon leakage? Production shift to countries with looser climate rules. The EU argues if Europe raises carbon prices at home, companies might shift production to countries with lower climate costs. CBAM is supposed to level the playing field. Now, the key 2026 change. The EU says CBAM enters its definitive regime from 2026 after a transitional phase from 23 to 25. In definitive phase, EU importers declares embedded emissions and surrendered CBAM certificates priced in relation to EU ETS carbon allowances prices. Also important, if a carbon price has already been paid in the country of production, the EU framework allows that to be deducted. And CBAM initially covers cement, iron and steel, aluminium, fertilizers, electricity, hydrogen, and the EU lists these sectors. Finally, the EU has also adopted simplifications including 50-ton exemptions threshold for CBAM goods aimed at reducing burdens on small importers while still covering most emissions in scope. That's CBAM in 60 seconds. Now let's talk about what CBAM means in real life. If you are an Indian exporter in steel, aluminium, cement, or fertilizer, CBM is not a policy debate, it's a cost. If you are a European buyer, CBAM can make imports more expensive, especially if embedded emissions are high. And if you are anywhere in the world, CBAM is a signal of a new trend. Climate rules are becoming trade rules. Now, here is the India's concerns. It's not anti-climate, and India's concern is fairness and development space, because if climate policy becomes a de facto tariff wall, it can punish developing countries exports even when those countries did not cause the majority of historical emissions. And this is where Europe's values collide with India's development needs. Now, Europe often frames it as a trade policy through values: climate ambition, sustainability standards, due diligence, and regulations. India frames its approach through development: jobs, industrialization, affordable energy, and poverty reduction. And both are legitimate priorities. The problem starts when one side tries to export its domestic rules as global rules without building fairness into the system. Reuters has described frictions where India resists EU regulatory moves like CBAM and deforestation linked rules, arguing developmental needs. And here's the another reality. The EU is not negotiating in a vacuum. Europe has domestic politics, farmers, industry, elections, and strategic goals like securing new markets amid global tariff shocks. Even if other trade contexts, Europe is pushing major deals while managing protests and internal opposition. So yes, Europe wants a deal with India, but Europe also wants control of standards. Now the big CBAM political fight is India has sought relief or flexibility on CBAM. The Financial Times reported the EU was set to reject an Indian demand for exemption, but noted the EU could consider reductions if India introduces domestic carbon pricing. This is the heart of the debate because India's argument is don't punish development, support transition. Europe's argument is carbon must be priced fairly across domestic and imported products. Both sides can still meet, but only if the outcome is not disguised protectionist wall. Now we connect it to the geopolitics. India and the European Union have repeatedly framed the relationship as a strategy. The EU has adopted conclusions on new strategic EU-India agenda, emphasizing prosperity, sustainability, technology, security, defense, connectivity, and global issues. India's ME has also pointed to the deepening ties and looking forward to adopting a new joint strategic agenda at a summit. So this isn't just about tariffs. It's about building a partnership that can stabilize the global economy at a time when trade is being weaponized and supply chains are being reshaped. And for global audience, here's the key point. If India and Europe can find a fair climate trade model, it becomes a template for the world. If they fail, we get a world of climate tariffs and retaliations. Now it's time for practical negotiation lens, the win-win package. If India wants a deal that protects development and builds global credibility, here's the smart win-win package. First, CBAM fairness plus recognition of credible domestic carbon pricing. The EU framework itself allows deduction where a carbon price is already paid during production. So India should push for a transparent, workable path where credible Indian carbon pricing and measurement reduces CBAM burdens without arbitrary handles. Second, market access in services plus digital trust. India's strength is service. Reuters notes India wants recognition as a data secure country to boost digital services trade. A real deal must reflect India's comparative advantage, not only Europe's industrial exports. Third, mobility and skill pathways. A modern trade deal must include talent mobility because in 2026 talent is supply chain. So India can offer without surrender is first phased tariff reforms with safeguards. India can offer reductions in certain sectors but in phases with safeguard triggers, especially for autos. Second, joint decarbonization partnerships. Europe wants cleaner supply chains. India wants technology and finance. The sweet spot is joint investment, green steel pilots, hydrogen corridors, industrial efficiency upgrades. Third, de-risk supply chains together. Europe wants diversification, India wants manufacturing scale. That's a natural match if the rules don't punish Indian industry before the transition is feasible. Now I promised you the final loop, India's three non-negotiable. Here they are. First, development policy space is non-negotiable. India cannot sign a deal that destroys sensitive livelihoods or MSMEs through sudden tariff shocks. The deal must be phased, fair, and build capability, especially in sectors like agriculture and small manufacturing. CBAM cannot become a disguised tariff trial. That's the second point. Europe can pursue climate goals, but CBAM must recognize credible action in developing countries, allowing fair deductions and avoid turning climate into protectionism. Third, a strategic partnership must include services, mobility, and digital trust. India cannot accept a goods only deal where Europe gets market access but India gets regulatory walls on data, services, or mobility. If those three are met, India can go very far with Europe. If they are not met, the deal will look big in headlines but weak on the ground. So here's the bottom line for 2026. India and EU can create a model where trade grows, emissions fall, development remains possible, but only if climate politics is handled with fairness. Europe must accept that development is not a crime. India must accept that the green competitiveness is the future. The world does not need another trade war. It needs a new bargain between prosperity and sustainability. Now comment below, should India prioritize the FTA speeds or CBAM fairness in 2026? And tell me what you want next in this series, India China 2026 or the global tech war and supply chains. See you in the next one. Thanks for watching this one. Jai Hind.